So, welcome everybody. Tonight we're going to be discussing a few different topics. So I want to just take some time to give a brief overview of everything we're going to go into tonight. For those of you who don't know already, this is going to be, we're getting close to the tail end of our beginner course series. If you're not currently caught up on all of the lectures, I showed it just a second ago, but if you have feel like you've missed some lectures or want to review, just go to this beginners tab. They're all posted in order for you. And we also have a playlist on YouTube where they're all ordered as well. So you can watch them from start to finish. So tonight, obviously, you can see on the screen, we're going to be talking about the sectors of the market. I also want to take just a quick second to mention some of the earnings reports of the week, just so you kind of have your eyes on them as we go into the rest of the week, just because I don't think we're going to have any other lecture before that anyway. And we're not going to have any earnings lecture this week, going through them all in detail. So just to point out the earnings reports we have coming up this week, Mario posted the calendar for us here in the announcements tab. A few ones to keep in mind into tomorrow. Oops, let me fix this really quick. So a few reports to keep in mind into the week. We got Microsoft tomorrow after the close, and then Wednesday after close is Tesla. So two relatively important names, Microsoft being more important than Tesla. We saw a nice report out of Netflix, I believe it was last week or 2 weeks ago. So a lot of market participants are going to be looking for Microsoft to continue that momentum, that nice strong report. Just to give you guys a little bit of insight in how I kind of easily tracked different stocks earnings. What I like to do is just go on the NASDAQ website and search up the ticker, obviously. And I've showed this before in a lecture, but this is just a really quick and easy way to kind of determine what investors are looking for coming into the quarter, even if you're not on Thinkorswim. So I really like this earnings per share graph. It just shows what they've reported in the past and what they've been estimating. So you can see these dark blue bars. Analysts have been expecting Microsoft earnings to be effectively flat on a per share basis. And they've reported effectively flat earnings on a per share basis. So they're really not going to be looking for much growth into this quarter. And I think, as always, the most important thing to be coming out of the reports in a bear market is really going to come down to guidance and seeing the terms and the things that they talk about in their call, whether they mention concerns of a recession, whether they mention concerns of tightening monetary conditions, or whatever the case may be. So be on the lookout for the guidance that they provide, but really just kind of a high level look into some of the information you can see here. You can see how forecasts have changed, previous reports, all that good stuff, how much they've surprised analysts. So just a really quick and brief way to kind of get a quick summary on earnings to understand what's going on there. And then obviously, if you want to see the full report, you'll have to go to the company's, usually investors relations site has that. But just wanted to give just a really, really high level introduction to what we have coming into the week. So again, Microsoft earnings tomorrow, Tesla earnings Wednesday, and then also FOMC next Wednesday. And the reason that I mentioned that in the sectors lecture is because these two companies, well, I guess mainly Microsoft, is part of a broader sector, being that information technology or just general technology sector, right? So Microsoft can be a really important indication for how the rest of the tech companies might report, mainly Apple, because Microsoft doesn't have as much ad-based revenue as some of the names like Google or Meta might. However, it still shows the strength of the big tech companies as a whole, which are going to be very important as we continue into the start of 2023. And we'll talk about more about how these companies within sectors are related and why that matters within this lecture. So with that being said, I say we get right into it. As always, guys, I try and keep as much information in these lectures as possible. This first part of this lecture might be a little bit boring, to be completely honest with you guys. So I'm going to try and get through it quick, but still get the information and the points across that are important, because this is very valuable information. However, it is kind of boring because it's just mostly PowerPoint. We're not really talking about charts as much in this first part, but I promise you it's relevant, and we're going to get into more advanced charting and probably just some trade idea creation and just talking about that towards the end of the lecture. So again, this is part of the beginners course series. If you're looking to review any of the knowledge that we've provided in the past few weeks and months, those are all posted in the Discord for you. So let's get right into it. So again, right, this is one of the last classes in the course series. The main goal of this course series is to create successful traders who can find the highest probability trades and act on those opportunities with confidence. And hopefully, after seeing all the lectures that we have been through so far, you're feeling a bit more comfortable, you're feeling a bit more confident in your knowledge, which is very important. And hopefully, after these next few lectures, we're going to be able to bring it all together and unify all this knowledge that we've provided in the past couple of months, and hopefully create a few traders, or many traders, who are ready to take their knowledge to the market and go from there. So yeah, really excited as we get closer to the ending of this course series. We got a few really difficult lectures coming up closer to the end where we talk about some more advanced concepts, ideally some concepts that we haven't talked about at all yet as well. So it's going to get harder from here. The first half of the lecture is going to be the last kind of easy portion, I would say. So let's get right into it. Let's get through this quick. And as always, even though I say I'm kind of not rushing through it, but moving quickly through it, please feel free to stop me with any questions, anything like that. But I want to get us to some more, I don't want to say valuable because this is very valuable, but more, I guess, engaging content. But hopefully you guys can get through the really like direct lecture portion of this class. So I want to start off with defining what an ETF is, and this will be more relevant later. So before I kind of talk about my definition, which is also kind of on the screen, how many of us are familiar with an ETF, have traded an ETF before, or kind of know how an ETF works? You can just drop a yes or no in the chat, just so I can kind of gauge where everybody's at. So what do you guys know? Do you guys know what an ETF is? Have you heard of it before? Maybe you've traded one and not even known it. Yeah, Zoom user says SPY. Yeah, that's an ETF. Okay, so we got a decent mix of yeses and nos. Yeah, VOO, that's an ETF. Cool. So the definition here is an ETF, or exchange traded fund, is a security listed on the stock market that can track an index, sector, or other asset. And that's very, very vague, right? And that's intentional, right? Because an ETF, or ETFs in general, are very broad. There's a lot of different types of ETF in the market. And we're going to talk about why that matters in just a little bit, but just a general idea. An ETF isn't necessarily a company, right? It's not like Apple. It's not like Microsoft. It's managed or ran by a company. However, the ETF usually represents something else, whether it represents some kind of commodity, some group of companies, or bond yields, whatever it might be. An ETF is usually an investment vehicle that represents some other security or group of securities. So we're going to talk about some examples of ETFs and kind of what that means, and some graphics to show. So again, right, as I mentioned, an ETF, this is a really nice graphic too. An ETF can own a bunch of different things, right? It can own groups of stocks. It can own bonds, commodities like gold or oil, right? That type of stuff. So an ETF essentially represents other things that might not be directly traded on the market. So for example, there isn't a stock that's just oil, right? There's futures that track oil. There's companies that produce and refine oil. However, there's not just oil, right? And that's where an ETF comes in. Is there's an ETF that tracks the price of gasoline, right? Things like that. So there's ETFs that allow us vehicles to make trades on these types of commodities without having to delve into the futures market or other types of investment vehicles. And there's also ETFs that carry groups of stocks, right? And I'm sure many of us have traded or seen SPY, which is an ETF that tracks the stocks within the S&P 500. So it owns the exact same amount of stocks that are owned within the index, S&P 500 index. And the SPY is something that we can trade just like a stock, right? So that's kind of the distinction there. And we're going to talk a little bit more about that comparison. So again, right, as I just kind of mentioned there, most major market indices, or should I say all major market indices, have a corresponding ETF that trades exactly like the index. So for example, the S&P 500 index, which is SPX, has a corresponding ETF, which is SPY. Same thing for the NASDAQ, the Dow Jones, and the Russell 2000, which are all very common indices that even if you've never traded before, you've probably seen these names flashed on the news before, or during COVID, these were probably all over the news, whether it was national or in your area, because this is kind of the most direct way that common investors and things like that typically refer to the market, as they talk about where the Dow Jones is trading, or the SPY, or excuse me, the S&P 500 or the NASDAQ, right? So these indices are essentially big groups of stocks. So for example, the S&P 500 holds 500 different companies, or the NASDAQ 100 holds about 100 to 102 different companies. The Dow Jones holds 30 companies, and all of these companies are held at different weightings. And just to give you kind of a brief overview into what that looks like, I'm going to show you what stocks are within SPX. So let's take a quick look. All I just search is SPX index makeup, and we can see what companies are currently being held or represented in the S&P 500 index. So here you can see they have 6 weighting of Apple, and this should be in percentage, right? So 6% of the S&P 500 is Apple, 5.4% is Microsoft, and you can go down and down and down the list, and you can see every single stock that is trading within the S&P 500 all the way to the bottom, which currently they're trading 503 companies at this News Corporation, whatever this is. So just goes to show that ETFs can be a lot of different things, right? In this case, it just represents how a bunch of different companies trade And these are meant to be representative of the total market and kind of show how the market is behaving as a whole. And then also there's the volatility index, which is VIX. This is going to be a less common ETF that's going to be displayed. Index, this essentially tracks volatility. So it performs a calculation based on the 30-day expiration SPX put and call options and turns that calculation into just a stock price and a chart, essentially. So again, just like any other index, these indices are not directly tradable. So you can't buy and sell the index. As it's kind of said in the name, it's just an index. It just displays a number, which is representative of the market. So for example, we can see these market indices here with the S&P 500, the NASDAQ 100, the Dow Jones. This is just a number, right? So you can't buy one share of the Dow Jones at 33,629, right? That's not possible. But what you can do is you can buy one share of its corresponding ETF, the DIA. So does that concept kind of make sense to everybody, how that works? I know I blew through that really quick, but it's crazy how fast time goes in these lectures. So I want to try and be as effective as possible. Cool. Yeah, I felt like I really went through that quick. So if anybody is lacking any understanding, please feel free to stop me and just let me know, because I totally don't mind re-explaining anything. And I also have some visual examples for those visual learners on the next slide. Who is speaking right now? This is Toasty here. All right, so let's take a look at some visual examples just to make this a little bit more clear. Yeah, Sarah, that's actually kind of the interesting thing is you can trade options on some of the indices, which makes it a little bit confusing. Like you can trade VIX options, SPX options, and NASDAQ options, and I'm sure Dow Jones and Russell 2000 options as well. So that is kind of a caveat, is technically you can trade it in that way, but those options work a little bit differently. You can't exercise those. They're cash settled. So if you hold one of those options in expiration, they just give you the money instead of giving you shares or anything, because there is no shares to be had. So yeah, that is a little bit of the kind of confusing part. That's a good point to keep in mind. But yeah, you cannot own shares of SPX, but there's ETFs that have 3x leveraged SPX or 3x short SPX. So a lot of different kind of layers to the onion as long as we keep peeling back and back. So let's take a look at some graphical examples here. So on the left is an image of the SPX index, and on the right is the SPY ETF. This is a little bit of an older screenshot, but you can see, I mean, conceptually, they're effectively trading the exact same, right? If you compare the two, notice how it's got this bottoming formation right here, right? The candles coming out of it look pretty similar, right? It has, I mean, the one difference I see is on the SPX, this candle is red, while on SPY, this candle is green, right? It was a bullish candle in this case. So there is some discrepancies between the two occasionally, but for the most part, they effectively trade the exact same. One thing to keep in mind is the prices aren't one-to-one. And what I mean by that is to notice that the all-time high of SPX is 48.18, whereas the all-time high of SPY at this time was 479.98. So you can't just divide SPX by 10 and get the price of SPY or vice versa. So they are a little bit mismatched in that sense. But for the most part, they're really, really close to each other. They trade effectively the exact same. So just goes to show how the ETF is meant to be almost perfectly representative of the index, but there's going to be times where it's not perfect. Yeah, that's just kind of how it goes. Can't always be exactly perfect. Another thing to note is on the SPX, there's no volume down below, whereas SPY, there is volume. So just kind of to note that you can't actually trade the SPX shares. It's literally just a number that tracks. It's a computation based on all the prices of shares within it. And the SPY is the same thing. However, you can actually trade this. So hopefully that kind of makes sense there. Just for another example, right, this is the Russell 2000. Note how the index looks relatively similar to the ETF. There's a little bit of a discrepancy here at the top. But yeah, I mean, really, really same concept for the most part. There's really not too big of a difference between the two. And yeah, that's just kind of how the ETF is compared to the index, right? Relatively similar in this sense. So let's talk a little bit about why can we trade SPX options? If I knew, I would tell you. I don't know why that exists necessarily. Yeah, I can't necessarily say why you can trade SPX options. That was just a decision that the SIBO made to issue SPX options, and yeah, I'm not exactly sure why. I'm sure they make money off of fees trading SPX options, but and I know institutions benefit from having access to SPX options because they can make larger leverage trades in smaller size. Like for example, if they wanted the if they're trying to hedge a position with SPY, it would take a lot more contracts to do that, which would move the needle on the bid and ask spread. Whereas on SPX, maybe you could buy less contracts to perform that same type of hedging activity. So again, I can't really pinpoint one specific reason why they exist. So I apologize I can't answer that question, to be honest. But if we want to have a longer discussion, we could probably do some research into figuring out maybe the historical origin of SPX options. But yeah, and ES, yeah, I think I have a slide on ES. So yeah, be ready for that. But yeah, so there's really 11 main market sectors where every stock that trades on the United States market, and really markets in general, can be divided into. So I'm actually going to do this really quick. Cool. All right, so the first really main sector that I know all of us are going to be familiar with is our technology companies. So that's going to be your software companies, your electronics, and your semiconductors, which are companies like Microsoft, Apple, NVIDIA, and Adobe, right? Then you have your financials, which are mostly just banks and things that institutions that are very heavily involved with money. So it's going to be your JP Morgan, Bank of America, Visa, and PayPal, names like that. Then there's your communication services, which communication services and technology companies can kind of blend into two, and you'll see why. So like, for example, Google and Facebook are considered communication services, even though they could also probably be considered technology companies. So really interesting there. It's kind of the same dichotomy where Tesla can be considered a car company, but also some might consider it a tech company. So you'll see the kind of the blending of sectors in some cases as well, but also in the communication services, you have Verizon, AT&T, and Netflix. And that just goes down and down and down. So again, healthcare sector, which is going to be your biotechs, drug manufacturers, consumer cyclical, which is going to be companies that kind of benefit from recession or don't benefit as much in a recession and benefit more with a strong economy. So that'll be your companies like Amazon or Ford, right? There's more people buying cars when the economy is strong. There's more people buying stuff at stores when the economy is strong, right? Relatively simple concept there. Then your energy companies, think about your gas producers like Exxon, Chevron, that type of stuff. Then now is where we get into kind of less commonly known companies, things that aren't really household names. From these first 6 sectors, I think anybody could probably name a company that's a technology company or name a financial company, but these are a little bit more blurred. So your industrials can be a little bit different, right? That's like your FedEx, your 3M, right? Fit into that industrial sector. Then you have your consumer discretionary, which is things like McDonald's, or which actually kind of funny. McDonald's fits into consumer discretionary and consumer cyclical, or your Altria, which owns, I think they own like 40% of Juul and Marlboro and a bunch of other cigarette brands. Then your real estate companies, utilities companies, and basics materials. So I won't go through and list all of those, but you might be wondering, well, why do we care about each one of these sectors, right? Well, each one of these sectors moves relatively similarly, right? So a lot of technology stocks move in unison, right? And just for an example today, let's take a look at semiconductors, right? So if you take a look at NVIDIA from today, NVIDIA was up 7% today, right? If we take a look at AMD, AMD was up 9% today, right? If we take a look at ASML, another semiconductor company, it was up 4% today. Maybe we take a look at Marvell, another 8% up today. So a lot of these even subsectors, right, within technology move very similarly, right? You take a look at Apple, right, up 2.3%, and maybe Microsoft up 1%, right? So obviously in this case today is a little bit of an outlier considering it seemed like everything was green today. However, you'll notice that a lot of these sectors move very similarly. And this is kind of the foundation to some of the trade ideas I like to take is I look at how a sector is performing as a whole, and then I look deeper into that sector to look at the strongest setups. So for example, if we take a look at QQQ, which mainly represents the technology sector, it also has some financials in there, at least the last time I checked. If we take a look at QQQ, right, you'll notice that QQQ as of today has broken this downtrend line to the upside, right? Really, we're going to need to see a weekly close above this level to have a large amount of conviction on this break. But so far, right, it's looking like a really nice break to the upside. Like I mentioned, we got Microsoft earnings coming up in this week, which could set the tone for tech earnings in the future. However, for now, the technical setup here is absolutely present. So we see this breakout in QQQ, right? When I identify a breakout such as this in a sector, I'm going to look to individual names to look for the strongest setups that offer the best risk to reward, right? So maybe that's going to involve me drilling down into the semiconductor world. Personally, this isn't something that I really am itching to go long on after the huge move it had today. It's kind of difficult for me to want to long that. However, it definitely does have room, at least NVIDIA. Right. So this is kind of my thought process. I look for how a sector as a whole is doing, right? So maybe it's QQQ. Maybe I look at the energy sector, right? And then I look within that sector to find some of the strongest looking setups. So for example, like I mentioned, NVIDIA, right? Really, really explosive move so far, even into last week, really strong close there. So that's kind of my general thought process. We're going to get more into that as we continue throughout the lecture, but just wanted to introduce that kind of concept. A really quick and easy way to visualize all the sectors of the market, and this isn't something that I use very frequently. I normally just look at the charts, but if you're just looking at a really quick and kind of easy way to see how everything's doing, you can use these commands in the Discord, heat chart full or heat map, and it allows you to see how everything is doing in a specific day. So for example, if we go to the commands tab, and we type in heat chart full, which last time I checked, that was still working. I think it just takes a second to load. So while that loads, I'll kind of go back to our example here. So if you type that command in, it first brings up this nice graphic, right? And you have all the sectors broken down, just how we discussed earlier. And you can see kind of what sectors are strong on a specific day and what sectors are weak on a specific day. And the reason that this is important is, for example, if on a day like today, where we have a really big green day in both QQQ, SPY, and most of the indices, yet one of the sectors is significantly lagging, like for example, if all of this was green except real estate and utilities, that's somewhere where you need to keep your eyes on, right? Because now you have to realize, okay, we had these really big days across the board except these sectors, right? And that doesn't necessarily mean anything directly. However, it's important to keep those sectors in your mind, right? And it goes, the same thing works conversely, right? If we have a really big red day in one sector or one company in a sector is just standing out and green for some reason, that's also something to keep your eyes on. Because if we have a green day, that name typically should have some of the most relative strength. If it's able to tough through a red day and still close green, you're going to want to look to those types of names exhibiting relative strength or relative weakness throughout the rest of the week to make some trades. So like, for example, there's another, I mean, we could go through this. Oh, TSB put in the command for me. It changed. Oh, because it's slash now. Got it. Thanks, TSB. I forgot about that. So whenever this loads, okay, I'll pull it up in Discord. So here you can see kind of what this was looking like as of today, right? So notice how, and this is a little bit of a simpler one, but same concept, right? So notice how we have a lot of our technology companies green, our financials green, but for some reason we have some of the larger healthcare names red, right? So ABBV, maybe we could take a look at Pfizer, right? So that's when I would pull up those charts and say, okay, Pfizer, right? Really, really weak. And now that I look at this chart, I mean, it's looking horrible, right? Very, very strong downtrend. That's incredibly notable here, right? Same thing with probably ABBV. Oops, ABBV, not Y. Oops, can't type. Same concept here, right? Where we have a really, really weak trend, which isn't following the rest of the market. And these are the type of names that you want to be paying attention to for the short side, right? So if, for example, SPY ends up failing this breakout, I'm going to want to be looking to these sorts of names, ABBV for one, for a potential short, right? Because this is a really, really weak name. It's currently trading at a really critical zone right at this daily volume shelf. So this is something that I'd be looking for to go short if the market ends up coming lower, right? It's got a lot of room down if it wants it. Then there's also kind of the converse trade idea of that, where I'd be looking for a higher risk trade with some of the names with the most relative strength, because it also has a lot of room down, but that's something that I do less frequently. Like, for example, if we were looking at a red day coming up soon, which, you know, nobody really knows when that's going to come, or if I might be looking to short NVIDIA, because this is kind of this last chance level for bears to step in at, and it would be a high risk one. It'd really be a quick stop loss above this high. However, it's a strategy that sometimes can work when timed properly, but just kind of to give you those two extremes there. But I know I've been talking about a lot so far. So how is everybody doing right now? How are we feeling? Have I lost anybody yet? Is anybody like, have no idea what I'm talking about or why this matters? You feel better than the SPY versus SPY part. Taking notes. Yeah, definitely a lecture to be taking notes on. I guess I probably should have prefaced that just because there's so much information in these slides that they're a little bit dense. So yeah, this is definitely a solid one to take some notes on. So I want to talk a little bit more about these individual sectors and how we can track them. So as we discussed earlier, there's these ETFs that are able and perform the tracking of each individual main sector in the market. So as you can see, here are all the tickers for each individual sector in the market. So for example, if we were looking to look at healthcare individualized as a sector, we could take a look at the ticker XLV and we could see how it's performing, right? So while the market is trading at highs, XLV is nowhere near the highs, right? It's actually a couple percent off of them, right? It's 5% down from the highs. Whereas if you take a look at the overall market with SPY, it's creating, well, I guess it's technically not creating new highs, but conceptually speaking, that's the type of analysis you want to perform. And Minion, that's a really good question. So this is just kind of the overview of ETFs, right? This is the main sector ETFs, but within these sectors, there's kind of more micro divisions, right? So if you guys remember, semiconductor stocks are part of this technology group, right? So we could look at the ETF XLK to get an idea of how technology is performing as a whole. And personally, I typically just look at QQQ. But if you're looking to see another level of detail, you could take a look at SMH, which tracks semiconductors as a whole, and note the strength of this specific setup, right? So clearly, we take a look at SMH on the weekly, right? It's coming right up to this little downtrend. So if we were to break above that, that's where you might be looking to delve into some semiconductor stocks and look for some long entries there, right? Also a little bit of inverse shoulders, inverse head and shoulders forming here on SMH, right? So this is the type of thought process that you would want to follow through with when performing your analysis is look at how I'll give you guys kind of my workflow. Every week, I look at SPY, QQQ, right? Those are kind of my weekly traders. No matter what, I'm performing analysis on those and adding those to the watch list. From there, I start to get different ideas, right? So I look at different sector themes, like maybe energy, maybe healthcare, right? Maybe communications. So I'm looking to these different themes to see if there's any room to run or relative strength or any kind of long potential or trade potential in general. So for example, if I was reviewing this XLC chart, which I didn't this week, I would have been looking at this breakout and retest into last week right below a volume gap, which should provide room to run. Obviously, in hindsight, it's easy to see how that played out. However, these are the types of things that I'd be looking for, right? In the communication sector as a whole, higher low was set, right? So that's something that you'd want to see. Breakout on the weekly. Then we look to some stocks within communications. So that would be something like Meta, right? Which might offer a stronger setup than the communication sector as a whole, right? So for example, Meta here on the daily, you have it bull flagging right below a significant volume gap with plenty of room to run, and even still looking like a long setup that has more room to offer to the upside. I mean, this looks really, really good still, a lot of room here. So Meta is definitely still one that's going to be on my radar considering where it's currently moving. Yeah, exactly. So the SPY should be the main chart to refer to and followed by the individual sector ETF or the individual name. When you're trading, if you're ever trading SPY, right, you have to remember that SPY isn't its own thing. It's just a bunch of different stocks. So if you're looking to trade SPY, you have to do the opposite, right? So you're trading SPY. Okay, well, remember, if we look back to our weighting here in the SPY, Apple and Microsoft make up 10% of the SPY, right? So you better believe that if Apple and Microsoft make a move in either direction, you're going to want to be paying attention to them because they're absolutely going to have an effect on SPY, right? When you see Apple have this really large, high volume candle right at open, it's very, very notable, right? When you see it break over 150 or 140 with just a small pullback, that's very notable, right? And that contributed to the strong trend all today, right, is that type of movement within those individual names. So it's very, very important to be looking at the ETF in conjunction with the individual names and vice versa, depending on what you're trading. But again, so important. And this is something that so many people forget, is that SPY isn't its own thing. Everybody's like, oh, SPY dropped the market, or NVIDIA follows SPY. It's like, well, no, NVIDIA is SPY. So if it drops, it's the SPY that's going to drop. So no, I'm not responding to anybody. It's, oh, I thought you meant responding to something anybody was saying. Yeah, I am kind of responding to you, OJ. Yeah. This is why flips, or a lot of our analysts look at SPY before entering NVIDIA, right? They're looking to see how the overall market is performing. Because, for example, if the overall market is trending to the upside, short side plays are going to be more difficult to take. You have to remember the concept that we mentioned a few lectures ago, where the trend determines where the probability of continuation, or should I say, where the probability of direction lies in the market. So when the trend is already to the upside, the probability of calls working is, for the most part, going to be much higher than the probability of puts working, right? And that's a very general blanketed statement. It's not always going to be the case. However, it's important to note that when the trend is up, the probability is in the favor of people with calls or betting on upside. Is the trend is already up, right? And it takes more effort to reverse the trend. So that's why you always want to be following the trend, especially on days like today, where you have such broad contribution from major market participants. Again, your names like Apple, right? Huge move to the upside today. Microsoft, not the greatest participation at open, however, ended up participating in that late day move higher. Let's see, Google ended up not participating directly at open, but still moved higher, right? So you're going to want to be looking at these big tech names. Johnson & Johnson is one of the bigger healthcare names. This is kind of an interesting case study. Notice how this, as part of the healthcare sector, really performed relatively weak today. So again, something to be watching into the week. And this is kind of funny. Johnson & Johnson has earnings in pre-market. So maybe this is a play into that earnings report and kind of that deleveraging. So that was kind of a lot, but hopefully that kind of makes sense to everybody. How's everybody feeling about these kind of sector analysis concepts? I know Minion asked if I have another lecture or another slide on all the more specific ETFs. I don't, because if I started boiling it down, there's so many different types of ETFs. And just to give you guys kind of a brief overview, there's leverage ETFs. So for example, SPY is just 1-to-1 to the SPX index. What if I look at UPRO? Whatever SPY does, UPRO does 3 times that. So, for example, UPRO is up about 3.6% today, and SPY was up, should be about, 1.2. So UPRO did 3x the move. There's also TQQQ, which is 3x QQQ. So today this was up 6.5%. Then there's SQQQ, which is 3x the inverse of QQQ. So there's so many different types of ETF in the market. There's a lot of ways to think about it. Again, like ETFs for commodities like silver, SLV, gold, GLD. There's gold miners, GDX. So it's like there's so many different levels to this. There's like hundreds of ETFs, thousands of ETFs. And that's not necessarily the most important thing. However, didn't TQQ used to be the inverse? No, you're tripping. It was always SQQQ. Yeah, I mean, 3x leveraged the Russell 2000 in TNA. Then there's TNX, which is 3x bear leveraged. There's 3x bear leveraged semiconductors, which is SOXS, right? So many different types of ETFs. It's crazy and probably a little bit overwhelming to think about all the different variations and leverage and that type of stuff. But I really wish I went short or long semiconductors on this breakout rejection. But looking at the inverse ETFs and short ETFs can sometimes help to get a different kind of perspective on the sector as a whole, just because it helps to see a whole sector contributing to a move higher. So for example, if we look at SMH, right, notice this breakout above these recent highs. This is something that you want to see for a strong breakout in the sector as a whole. Right? Not only are the individual names moving higher, but the whole sector is moving together in unison. So it isn't just an individual stock thing. It's the whole sector is a buy right now for multiple different big money players. So that is something that you're going to want to continue to put your eye on, is market leaders or market sector leaders or secular leaders, sector leaders is the words that I'm looking for, typically are going to move in unison, such as this, right? And notice how we got this huge breakout in SMH today, being all of the semiconductors. So NVIDIA, AMD, all those names are going to be things that you're going to be watching on dips, right? You're not going to want to long the top here. Obviously, we got a huge aggressive move. I'm not one to long after a 9% up day. However, it's something to keep in mind. Another sector that I didn't really mention that isn't necessarily an official sector is kind of just growth stocks as a whole. Growth stocks being kind of this small cap sector with Shopify, SQ, Pins, Etsy, right? All of these names also are kind of similar in the sense of they have relatively, well, used to have high growth, now not so much, but it's kind of similar concepts in the sense that these are just the same types of stocks, right? They're a little bit higher risk. They're not as established of companies, but they have prospects for high growth in the future, right? Is that going to come true? I don't know. But that's kind of the big idea with all the different types of sectors. With that being said, I kind of want to start introducing everybody to more of the advanced technical analysis side of things to just give a little bit of a preview into the next couple lectures. And we're going to talk about different trading plans, all that good stuff. But is there any further questions on sectors? You said you have BT calls. Can you check that BT? You have 1.5. I'll check that at the end if we have some time. But is there any questions regarding sectors before we get into some more complex content? I know I blew through that relatively quickly, but as long as everybody's good, I think I covered everything that I wanted to there. How's everybody feeling about that? You guys can feel free to let me know in the chat if you want. Soaking it in. How long have I been trading, studying the markets? Let's see. Well, that's two different answers. I've been studying the markets kind of informally, probably for 5 to 6-ish years. I started back in high school, just kind of paying attention to things. And I mean, really, the first time I had experience with the markets was in elementary school, and we had kind of pretend stock trading where we all picked one stock that we liked and pretended to buy it, and wasn't even really paper trading. But that was kind of my first exposure to it, which I guess you could consider to be relatively formative. However, trading direct experience, like actual executing trades, I started in June of 2020. So you can consider to me to be kind of that post-COVID trader. So that gives me going on 3 years of experience this June. So yeah. Do I full-time trade? I do not, and I don't want to. I never want to have only one. Okay, well, full-time trade is also like a relative question because a lot of people full-time trade, but this isn't their only source of income, or at least they say they full-time trade, but have other sources of income. And to me, I don't consider that full-time trading because that's not the only thing you do. So I never want to be a full-time trader. I always want to have multiple sources of income. And I'm also passionate about engineering as well, which is my current job, at least my day job. So I enjoy that. And I plan on opening up my own business at some point in time. So I would do that in unison with trading, just because I think that trading is it's really fun. It's my passion. But it's also a great source of secondary income and always something to fall back on. And I don't ever want to be strictly reliant on trading solely personally. I just don't know. I know myself emotionally, and I know that that pressure would probably get to me more than I think I could handle. So I don't think I could ever strictly depend on trading for my sole source of income, just because it would take me a while emotionally to deal with that. It's been a long ride of learning about kind of how my emotions play into the market. And I've come to the point where you got to just accept the way you are and learn to trade around that, and obviously work to improve in every way possible. However, there's some things that just kind of are the way that they are, and that's totally fine. Cool. All right, so let's go through a little bit of analysis here. So for those of you who have been to each and every lectures, hopefully you'll know exactly what I'm going to be talking about here. For those that haven't been to every lecture so far, haven't rewatched every lecture, take this as an excuse to go over and rewind and watch the lectures over the past few months. and catch up on the things that you don't know, or if you have seen them all, take that time to kind of review and brush up on your knowledge. So I'm going to walk through kind of my typical analysis, and we're going to talk through everything that's going through my head as we go through it. So every time I'm doing my weekly analysis, I always start on the higher time frames, and typically that's starting with the weekly chart. And I'm just going to remove all indicators for right now. And I always start by drawing out my weekly levels and weekly trends. And weekly trends, this one's pretty easy, right? There's a really clear trend present right here. Some people have been calling it the mother of all trend lines, which I've thought is pretty funny. So very evident trend right there. And then I like to chart out some of the more significant weekly levels. So that's going to be somewhere around, let's see, looks like this area. We got another weekly level of significance up here. And then another weekly level of significance down around this area. I'm just trying to figure out where I want to put it. Right around there. So those are the three levels that I'm going to roll with. Yeah, we're done. We're done with ETFs and sectors for now. What I want to do is I want to start walking and giving kind of an introduction into the next few lectures, and start a little bit slow today so we can ramp up into the next few lectures, if that makes sense. But if you have any questions on ETFs and sectors, please let me know, and I don't mind going back at all and giving a little bit of review. Why the second area? I'll explain every single level that I took, don't worry. What tool is that? It's just the price level tool here. So reason that I chose, I clicked in two spots for the trend line, one to start, one to finish it. All right, so let's talk about why I chose these specific levels and trends. Right? The trend isn't necessary to draw all the time. This just helps me kind of visualize it. And also it typically acts as a point of resistance, but identifying the trend is the first thing that's the most important thing to keep in mind, is understanding the structure of the market on the higher time frames. And notably, the structure currently consists of multiple sequential lower highs, right? Which means that we're in a downtrend, right? Simply put. So just going to remove those green circles to clean it up once again. Right, so always looking to market structure first on the higher time frames, which gives me an indication of who's in control right now, that type of stuff. Right. Next, you'll notice a couple higher lows that have been set. Right, so we've set a higher low, which is the first significant higher low we've set since the start of this bear market. Right, if you notice, we set this low here, and this low here. Right, we used to be setting lower lows, and now we set a higher low right here, which is a significant change of character in the price. And that's something that I like to pay attention to, and that's kind of how I describe it, is I look for changes in character in the price action. I look for things that are behaving differently or acting differently than they used to be, right? So previously we were getting sequential lower lows, right? Textbook downtrend. And all of a sudden we set this higher low and held it. So that is a significant change for me. And that's something that really makes alarm bells go off in my head and say, okay, something has changed here. I need to make sure that I'm paying attention to that. And that's exactly what had happened, is once we began identifying, and this is all documented in my watch list if you don't believe me, but we began identifying these wicks to the downside, indicating the presence of buyers here at this higher low. And that was starting to indicate a potential reversal in the short term. Now you guys might be wondering, okay, well, why is any of this jargon even matter, right? Why do we care? As I mentioned earlier, right, understanding the trend in the market is the most important thing to be doing when trading. You have to know which way we're trending and which way we could potentially trend or continue to trend based on these higher timeframes, because the higher timeframes give us the most important data. They give us a bigger picture on what's going on. And when we see one of these big picture changes, we need to shift our whole trading focus, ditch any bias that we previously had, and understand and respect the changes that are currently occurring. Right. So even now, right, we're seeing another move above this trend line, which we've seen before. But if we hold this break above this trend line on the weekly, that's very, very notable and something to absolutely keep in mind if we hold this break above. Somebody says, why weekly instead of daily for higher time frame charting? I always just start my week off with charting on the weekly. So I look usually on Saturday or Sunday and look to see how the weekly chart is looking, just because it's just a time frame I prefer to look at. It gives the biggest picture that I like. The monthly is a little bit too big for me for the most part. And obviously everything above that is a little bit too large for me. However, I think the weekly is a pretty nice time frame, just because it gives a really great summary of everything that went on within the week. We could see if overall volume went up or down, and get a really good picture for the trend, the current trend. So that's kind of why I like the weekly there. So that's kind of why I identified this trend line, and just keeping in mind this market structure that's currently changing. And we can even draw another uptrend right here, just to make that very expressly clear what's kind of going on here, right? So we have this compression here in price with lower highs and now higher lows, which, if you remember from the patterns lecture, this is a pattern that we'd be potentially watching, which is a symmetrical triangle. Now, you might be wondering, why did I choose all these levels? And if we think back to the support and resistance levels or lecture, a lot of what I discussed is looking at levels based on where price has made significant pivots in the past. I like to look at where buyers and sellers have stepped in sheer force and really shown up in strong numbers, right? So the reason that I like this 410, 411 level up here is, notice all these wicks off of this level way back in mid-2021, right? So for a long time, there's been buyers present at this level supporting price. Then we come down to here, where we saw an extremely aggressive wick off of this level. We made almost, ultimately in 1 week, the second we hit this level, we moved up $26, which is huge, right? A 5% move, 6% move in a week is insanely massive, just off of this single support level, right? And then notice how we weakened at the support level. We made multiple pivots off of it again in more recent history, right? Look at these really, really perfect rejection candles right off of this resistance level, right? So that's why I like this level, is just look recently, especially, right? Notice these strong reactions we've gotten off of this level, right? Minus 15%, minus 8%, 9%, right? So really, really big reactions of sellers off of this level, right? And that's going to be how I typically find my levels, is I'm looking for where we've gotten strong reactions in the past. So here at this 392 area, we've gotten some key rejections and bounces off of this level more recently, right? And same thing with this 375 area, right? This 375 area represents this previous higher low. We had some consolidation above this level. We had some rejections at this level, right? So a lot of different reasons to like these specific levels. And if you remember from the indicators lecture, I also love using the volume profile, which shows me volume by price. And this also helps me visualize significant areas of support and resistance, right? So again, just to recap, what kind of we're seeing here on this volume profile is these shelves represent areas of strong support or resistance, where the volume profile sticks out like that. So these areas represent where we should see a high concentration of buyers and sellers, whereas these gaps represent where we shouldn't see too many buyers and sellers. And that contributes to quicker moves, right? If you notice the moves we made within these volume gaps, every time we break into this volume gap, it's a quick move, right? This time we broke into the volume gap, we were through it within a week. This time, 1 week, 1 week here, 1 week here. I mean, pretty much 2 weeks on that reversal, 2 weeks here, right? So every time we come within this volume gap, we move very rapidly. And you'll notice we're beginning to creep right back into it, which means we could have a very volatile move in store to the upside if buyers are able to hold it up here. So that's another thing that I'm keeping in mind, is now I'm starting to use some indicators to my advantage to build my trade idea, right? And keep in mind, we haven't even left the weekly time frame yet, right? So I'm identified trends on the weekly. I've identified key levels on the weekly. I'm starting to look at some of my indicators, right? So maybe I'll look at some other indicators, right? Maybe I'll look at the location of some of the key moving averages, right? Notice we're trading right at the 50 weekly moving average as of today, which is usually a very key level for sellers to step in a bear market, right? Notice how this 50-week moving average has been defended in the past. If we are able to make it above this 50-week moving average with a weekly close currently above 402.80, that's going to be a really big deal, right? Because that's indicating, again, another change in character, right? Remember how I talked about this higher low as a change in character? Look at the previous behavior at this 50-week moving average. Strong rejection, strong rejection. If this weekly candle doesn't turn out to be a strong rejection, this is another example of somewhere where alarm bells need to be going off in your head and saying, something is changing here. Something is not the same anymore. And this is also just like identifying patterns. And this is the way I typically like to identify patterns. It's not, draw up bull flags and stuff like that, but identify patterns in the actual price action, right? understanding how things are changing, understanding how structure as a whole is changing, right? Because right now, there's a pattern where we reject this 50 weekly moving average, right? Really simple. We just typically reject that in a bear market. It's a strong place for sellers to defend. And now we're right back to it. So if we don't get a strong rejection off this level, you have to be considering more upside is on the way. If we get a weekly close above this level, you have to be thinking more upside is absolutely possible if we close above this level. Does that make sense, everybody? I know I've been kind of rambling on a lot. Minion says, how do you get the volume profile to show up while looking at recent price action? Minion, I don't know. We'll have to DM about that. I don't know what you're talking about. Send me a screenshot. And yeah, that's a great point, Bryson. Look at this potential inverse head and shoulders, right? You have your shoulder there, head here, another shoulder here. Getting a little confused. That's okay, Martin. This is definitely going to be one of the more confusing and complicated parts. If you have any questions, feel free to let me know now. And actually, I'll even take a step back and I'm not going to continue on anymore tonight. I just wanted to give you guys an introduction to get you thinking like this for the next few lectures and into this week. So just to summarize kind of the thought process is we're starting on the higher time frames and we're doing a deep dive into what exactly is going on here. We're studying the price action through multiple different lenses. We're looking at the trend. We're looking at indicators. We're looking at volume. We're looking at patterns. We're looking at candlesticks, right? And how we're seeing these wicks to the upside or things like that, right? So many different ways to build a thesis in the market. That's exactly what we're doing is we're looking at different reasons why something could happen, right? So for example, everything that I mentioned was actually part of my bullish thesis before the week even began. So important to note that this isn't all just hindsight, right? These are things that we can actually use to our favor to create trade ideas, right? And if you look back through my watch list, you'll see multiple of the trade ideas that I planned out that so far I played out great, right? And I'm not trying to toot my own horn in any way. That's not the case. I'm definitely wrong plenty of times. I'm just saying that this actually matters. Understanding where the market is trading helps to understand exactly what your individual stocks can be doing relative to the market. And this type of analysis is something that should be done thoroughly and very frequently on any stock that you're looking to trade, because the more familiar you are with every time frame, everything that's going on, the more confident and comfortable you're going to feel when taking your trade. And that is exactly what this course series is all about, is understanding all of these aspects of technical analysis and some fundamental analysis, then using all of those tools in your tool belt to build high conviction trade ideas where you can identify a strong setup, identify key levels, and know exactly where you should expect sellers and buyers to step in, be able to plan for multiple scenarios, and have actionable trade ideas ready for every day of every week. And that is a big idea of this course series. And now it's all beginning to come together, is we're beginning to actually combine every individual bit and piece of different things that we've talked about all into one. And this is the type of procedure that you will repeat day in and day out when becoming better at technical analysis and just reading charts in general. And just being better at trading is all about understanding the specific stock that you're trading, understanding the technical aspects that can affect it, understanding macroeconomic factors that can affect it. So there's so many things that play into it. We've discussed a good portion of them. Well, I shouldn't say that because there's an infinite amount of concepts to be talked about in the market, but we've discussed a good helping of them. And we're going to continue to build on these concepts all together. But yeah, I mean, this is what it's all about, is bringing everything together. In the next few weeks, we're going to talk about building trade plans. We're going to talk about stop losses. We're going to talk about portfolio balancing. Hopefully, we talk a little bit more about macroeconomics and understanding how the Federal Reserve and other macroeconomic factors affect specific trades and charts and stocks as a whole and the whole entire market in the world. But yeah, that's my spiel. That's my big idea right there. Let's see, what do we have? Do I make levels on the 1 hour chart? Yeah, so I start on the weekly just to give kind of my workflow, right? So we talked about big idea. I'm not going to do any more charting for now. I just wanted to get you guys thinking like this for the next week and into the lectures and just starting to practice some of this technical analysis all combined. So I start on the weekly. I typically zoom into the daily after that. Then I go to the 1 hour. And the 1 hour is really the last place that I look to find key levels. So I'll look for the last kind of pivots that I can see here. And typically on the 1 hour, I mark the levels differently so I can see that they're 1 hour levels. So I typically make them dashed like this, so I know that they're a little bit less significant because they're hourly, right? So hourly levels are less significant than weekly levels. And I try to denote that. Everybody can do that in their own different way. That's just how I do it, but yeah. How do I get my volume candles to look like that? That's just an indicator. It's not one that I typically use as much anymore, but if you're looking for it, it's going to be pinned in my tab, I think. At least it used to be. Yeah, buy versus sell volume script. So if you go to my tab, Toasty, and go to this pin messages, it says buy versus sell volume script. What are my 5 main confluence for my conviction on my trade? Very good question. First, it's market structure. It's what is the trend and what are we doing relative to that trend? Are we setting a new high? Are we setting a new low? Are we trending upwards? Are we seeing a reversal play out? Next, it's levels, right? So support and resistance or just trends in general, right? Following that in kind of in conjunction with levels is looking at volume, right? So understanding volume patterns and what they mean, right? So for example, seeing high volume on these green candles and lower volume on that red candle would indicate to me that there's more buyers than sellers. Even though we're so beaten down, that's something that you would want to see, right? So that's kind of number 3 is looking at volume patterns. Number 4 is bringing indicators into things. So looking at moving averages, looking at, I mean, really, this could be multiple pieces of confluence too, is multiple types of indicators, right? Different moving averages, different studies that you might prefer, right? Bollinger Bands is kind of the one that I use most frequently. So that's 4. Usually my 5th is going to be flow, right? And again, it's not always these 5, but these are kind of the 5 main tools that I use is price action, levels, indicators, volume, and flow. It's really the main things that I'm looking to for every trade possible. Does that make sense? Cool. So how's everybody feeling about tonight? I know I probably just threw a lot of information at you, but how's everybody feeling? And Minion asked, what am I looking for in specific for flow? I'm looking for aggressive hits in one direction. So it needs to be obvious what the intention is. It needs to usually be single-sided at the ask, aggressive prints. I'm not looking at prints at the bid unless it's sell to open. I'm not looking at prints in the mid unless it's a large size. I'm really looking for aggressive repeated orders that are directional and usually single stock orders, not ETF flow. Because ETFs can easily be a hedging instrument, whereas single stocks are going to be less commonly used as an overall market hedge. So aggressive monodirectional flow with short-term expirations that's out of the money is like really what you want to see. Like for example, today there was flow into SQ this week, 90 calls and 85 calls, which is seriously out of the money with very little time. And they were hitting those 90 calls here. 90 and 85 calls. They were hitting them here when we were trading 79. And I'm sure those probably did. I mean, let's just look at what they traded at. I looked at the 90 calls. Oh, I still have it open. Yeah, look at this, right? These 90 calls, 43K volume to 550 OI, right? So this is massive, massive flow. And you don't even need a flow service to look at this. You can just look at the option chain and compare volume to OI, right? So if I'm looking at the flow on SQ, I take a look at just this at the money 80 call, right? It had 2.3K open interest. Today it had 10.7K volume, right? So 4K volume per OI. That's just a showing that lots of those contracts were changing hands today. A lot of people wanted those contracts. So it just shows demand for monodirectional flow and aggression, right? We're looking at high directional flow in weeklies where you don't see that same aggression in the next weeks, right? The next week 90s definitely got some hits today and the 95. So something to be keeping in mind. But yeah. Volume versus OI. Volume is the amount that were traded in that specific day. OI is the amount that existed at the open. So OI isn't updated. It's only updated once a day at open. It just is how many people, how many of those instances of that contract actually exist. Norvin, if you DM me, we can talk about those stocks individually. And then more open. Yeah, exactly. Any advice? What advice, books, or videos do I recommend for new traders? I don't know if these are all the best for new traders, but I think in general, I think they're really valuable. Just because they give you a different perspective, and they might be a difficult read, but I would assume that everybody in here is totally smart enough to understand a difficult book. So I wouldn't put it past you, even if the knowledge might be above your level at this point, but that's what it's for. I would say one of my books, I'm actually reading this book again. It's The Intelligent Investor. I really like that one. It's really not related to trading. It's more related to investing, but it's got some very helpful tips on psychology. It has so many great historical examples as well. I mean, it talks so much about the markets of the 30s, the 70s, which is really, really useful. And then another one that I haven't started reading, but I want to, is Volume Price Analysis. I want to read that one. And then YouTubers, I don't really watch anybody on YouTube because I think most people on the internet on trading are kind of losers. I think most people are just liars, and I don't like that. I don't like the people that are just that are like clearly just trying to, flex or whatever, or lie about what they're doing. And I'm not into any of that. So the only people I'm going to watch on YouTube are really just old people who traded their whole life. So one guy that River put me on to is Al Brooks. He's crazy. River just told me how he was watching a video of him scalping the 15-second chart. But he's got some great concepts talking about price action that I've actually implemented in my own trading. Yeah, obviously OOT has a YouTube channel, but I know obviously, I'm not expecting you guys to only watch our videos. I know that we have good content, but I know there's also other good content out there. But yeah, I would just be careful on the types of people that you do follow. Like if you see them posing with, Lamborghinis and stuff, it's like, okay, like, how much do they really know about trading and that type of stuff? So that's, I like to learn from the people who have been in the market for years. So that's, I've watched interviews with Steve Kalajian, who's trades like 40 to 100 to 200 stocks in a day in ETFs and bonds. And yeah, Al Brooks is really, really knowledgeable. And yeah, hopefully that helps. What's the guy's channel? Al Brooks. Yeah, you can trade bonds. He trades yields, I think, too. You can talk to River about Kalajian. He loves that guy. But yeah, few guys that I look up to that aren't my friends in the server are, well, I shouldn't say I look up to because I don't really, but I learn from them. Al Brooks, Steve Kalajian, and then yeah, that's pretty much the main two that I watch. One guy that I've watched before that's a bit younger that I think actually is pretty good is Carmine, I believe you say his name, Carmine Rosado. He's pretty good. He's a supply and demand trader, and he's pretty good. But he talks about futures mainly, so it's not necessarily exactly the same. I'll put them all in the chat. I'll shout them all out. Al Brooks, Carmine Rosado, and Steve, I don't know how to spell this guy's name. Kalajian. Those are the names in the chat. Yeah, those are the YouTubers that I watch. I don't watch anybody else on YouTube. I had in the past, but they weren't very good resources, so there's no point in recommending them. But yeah, those guys are all great. Al Brooks and Steve Kalajian have been trading for like 30, 40 years every day. So, you can't go wrong with them. And then Carmine Rosado, he's really good with supply and demand. So I value his knowledge on supply and demand. And obviously I learned so much from the people in this group as well, like Tilio, even River, Shark, who used to be here, who hopefully will be back one day. So yeah, hopefully that helps though. You see Jim Cramer? Yeah, Jim Cramer, I don't know. I don't pay attention to him, but it's pretty funny how he can be so wrong. But everybody can be that wrong. People are so focused on making fun of him for being wrong, but it's like, if you're not wrong, you're not really trading. But he's like excessively wrong. So that's like, he's really wrong. It was funny. I just saw like a meme when he cried on TV about Meta. And ever since he cried on TV about Meta, the stock's up like 50%. So I thought that was pretty funny. But yeah, I think that's going to wrap it up for the evening. As always, everybody, it's a pleasure being able to spend this time with you all week in and week out. if there's any suggestions you have for the next lecture, please let me know. I always want to make sure your time in these lectures is as valuable and as worthwhile as possible. So if you ever feel like there's something that we're missing here, please let us know. We can't act on it if we don't know. So please, please, please tell us if there's something that you want to learn about, something that you want to learn, something that you want presented differently, or if you have a special learning style that you don't think that we cater to enough, please let us know. On that learning style thing, I do my best to cater to every experience level and learning style. Obviously, I'm not like a credentialed teacher, but I'd like to think that I do a decent job at that. If there's any way that you would like me to present information differently, please let me know. I do my best with the auditory, the visual, and just kind of the lecture style as well, and examples. I like to think that covers most of the bases, but if there's something that you want presented differently, please let me know. And I would love to accommodate in any way possible. More quiz. Okay, that's great feedback. Yeah, I can do that. Yeah, some of the lectures have more quizzes. This one in specific, though, I don't know if the quiz would be worthwhile because, like, I'm not trying to check if you memorize things. Like, you know, you don't need to memorize the sectors of the market, and you don't need to memorize their ETFs. You can just Google that, right? I'm not going to give you impractical quizzes like you might get in school, but the quizzes can be valuable. I want to quiz on concepts that are applicable. So I will work on developing more of those. Cool. Hey, I appreciate everybody's time here. Indices versus ETFs. Zoom user, send me a DM and I'll give you a little bit more of a personal explanation if there's still some confusion on there. So feel free, if you guys have any confusion that's left over from this lecture, please reach out and I'll do my best to assist you in any way possible. Okay, yeah, go ahead and review the lecture. And if there's any more confusion, or if you want to just reach out, please feel free to just shoot me a message and I'll get back to that. All right, everybody. Well, hey, thank you all so much for spending your time here with us tonight, and I hope you have a great rest of your week. I'm actually off work tomorrow, so I will be in the trade floor all day for the first time in 7 months. So I'm excited. In a few months, I'll be in the trade floor a lot more frequently. But yeah, at VC, I'll be down. Flips, I let Flips, run it. He's best. I can't get as hype as him, but I'll for sure be there. I'll for sure be in VC. Yeah, I'll be there. All right, everybody. Well, hey, have a great rest of your evening. I will see you guys all. Yeah, maybe I'll be in beginner VC actually, because Flips, I mean, y'all know Flips. Flips doesn't need any help in his VC. Yeah, Zoom user, that's a good idea as well. Yeah, I want to do something like that, like paper trading type stuff live. Yeah, all right, everybody. Well, hey, I appreciate everybody's time tonight, and I can't wait to see you all in the next week and in the chat tomorrow. It's going to be fun finally being around here for a full day. All right, adios, everybody. See you guys all soon.